So you're struggling to find that area on a change of character, or as I class it, a confirmation reversal entry. And you want to be able to identify it in a much more simplified manner. But that's exactly how I'm going to solve that problem for you today. I'm going to show you how to simplify the process and to find much more accuracy when looking to take a trade. So let's head over to the charts right now and we'll have a look and see how this simplified method can help your trading. So we're on the pound US dollar pair. I'm going to go to the weekly time frame first. I'm going to show you a recent area where you can see the market showing me these reversals in the market. To start with, we have this area here on the chart where we can see a break of structure to the upside. This blue candle represents an imbalance zone has been left over. Inside these zones, you're going to find leftover areas basically of orders what have been remaining in the market which need to be filled. So let's mark this out as an imbalance zone. We can identify the market comes back, fills that imbalance zone on the weekly time frame, and we have a nice bullish move away. Understanding this process is also key to understanding where to find your trades. We also have an area of demand here as well, but for this purpose, this is an area of imbalance which created this reversal in the market. We could have caught a trade. And what we do here is we go down to a 4-hour time frame. If we're on a weekly time frame, I like to look at a 4-hour time frame. I'm going to look now for that reversal out by using a term called the change of character. Now, for me, it's actually classed as a confirmation reversal entry, which it has been for many years. Recently, across the YouTube platform, I've seen the change of character rising. It's just a newly named term for a reversal in the market. It's nothing more, nothing less than that. So please do not take change of character as something new, something special. It is simply a reversal in the market. I'm going to demonstrate that to you right now. So here we have the market dropping down into this area of imbalance. We fill the imbalance here to the pip. Now, to look for the change of character, you may have seen on some previous videos, I demonstrate this using the wicks of the candles where we see a break of structure. Now what I'm going to do, I'm going to show you a simplified method to make this much faster for you to be able to start finding these reversals. All you need to do is go to the line chart. On that line chart, this is going to show you the fastest way to identify a reversal in the market. And right here, we can see the market creating this low, lower high, lower high, a lower high. But we do not make a lower low. This is the last lower low we make from this swing high. So once you see that, we can mark off here a level. That is my break of structure where I'm looking for a change in trend. That is my confirmation trend reversal. All from what you've learned it to be is that change of character. So when we see the bullish movement here to the upside, place price back in the chart and you'll see a big strong blue candle. What does that represent? Again, an imbalance zone has been left over. Here we can then draw out a level. Hey traders, we'll get back to the video in just a moment, but I want to give you a gift for hanging out with me today. I want to give you my free trading strategy class and cheat sheet. This trading strategy class and cheat sheet will go through everything you need to know about applying a supply and demand strategy that I personally use to generate profits. But it's more than just a strategy. You're going to have some actionable steps to accelerate your growth with learning how shifting your focus can generate more profits and the steps to building a profitable strategy for yourself. Look, you don't have to spend a lot of time on this. It's about doing the right things in the right order. And it's free as my gift to you. So just go to Norfolk FX Trader.system.io free strategy class sign up or hit the link above now to get your free trading strategy class and cheat sheet. Now back to the video of imbalance. Just like we saw on the weekly time frame, we saw the 4-hour come into an area of imbalance. We're seeing the same thing here on the 4-hour with a lower time frame, which will be for me a 30-minute time frame coming back into the imbalance. Where we saw the weekly time frame showing you a full reversal after filling that imbalance, this time we see a 50% area fill before we see the move to the upside. Now we went through the previous video understanding the use of the imbalance zone where we see that market either filling the full imbalance or 50% before we see a reversal. Just in the same thing here on this video. So when we see the market pulling back into this 50% area, let's just mark this level off here. Then I'll go down to 30-minute. We can do the same thing on a lower time frame. I want to show you that this works from a weekly down to currently now a 30-minute. And you can see that the market comes into the 50% area. Right, looking at price, we go to the line chart. On that line chart, once again, we're going to look for that reversal out, that confirmation of the reversal. We can see the market makes the last low here. That's our last lower low in the market, which means this is our last lower high. That is the breakout point we're looking for. There, you can see the breakout happens. That is what they class as the change in character. We've come in, we've created a change in character, trend reversal, same thing. We can see the bullish move up. What does that candle represent once again? Yes, the imbalance zone. So we leave behind here an imbalance zone once again. Look, this has happened over and over. And again, look what happens. We got a full fill of the imbalance. Now, as an imbalance zone, we also have here an area of demand. I have a nice area of demand I can mark on the charts, where we can look for an entry out of the demand zone. Now, I believe if we go forward, you can see we come back into the demand zone once again. We actually retest that demand zone. We never close through that imbalance. That's important to understand. So the market actually tests it once. And if I just mark off the low of this level, look what happens. The market has to go lower, take that low again to manipulate through that low, just takes the low by a pip, and then picks up more orders, and we see a big push away. And that's how they stop you out before they move the market. And that's a big push up in the market. Now, again, we can do the same thing. When we do see this market go lower and makes that reversal, we can now go to a 5-minute. Just find that on the chart quickly for you. There's the 5-minute chart. Let's go to a line chart. Zoom in. Remember, the process of using the line chart is much faster for you. You haven't got to think about anything. You can just look at the chart, find that reversal. Again, we do have a lower low there, but this looks like more of a swing point in the market I like to use. So we can see a nice breakout. Okay, there's a break and retest. Again, last week's video. If we now go to price, what do you see, guys? Look, we see a lovely area again of imbalance. And where do we come to? The 50%. Let's just remove this arrow. We come to the 50% of that imbalance once again, and then we see a reversal and the market goes up. And we could do the same here. We could go down to 1 minute time frame, or even lower, 30-second time frame, and look for the same thing. This will happen over and over again. The change of character is nothing more than a trend reversal in the market. As I class it, as I have for many, many years now, a confirmation reversal entry. But the change of character, as you may well know it as, it's exactly the same thing. As long as you understand that this method is going to simplify it for you to be able to find those turning points with quickness and ease in the market, for you then to find your entries, this is going to help your trading. So how do we know when to look for an entry off an area of imbalance or an area of demand? Because if we had an area of demand drawn here, look, this is our area of demand I would draw here in the market. We never come back to it. At that point, I've missed the move. Now, quite frankly, there is no way of knowing for sure if the market's going to just fill an imbalance and then make the move or go to demand zone. If you want to have the odds in your favor, then you look to take an entry on the demand zone every time. Yes, sometimes you're going to miss it. Other times you will get triggered into that trade. If you were taking an entry here on a 30-minute entry, you would have caught a trade using a set and forget strategy. Now on a 5-minute entry, you've missed that trade. And that's a big trade. I mean, the market goes for a long time up here, all the way up. So how can we look to capture that trade? How can we look to identify the market showing me an entry here? How can we confirm this? Let's go back into this price here. An easy way to confirm this is we look for a reversal out. Now, a simple reversal here shows me that we can take an entry off this candle. So forget about the demand zone, the imbalance zone. Wait for the confirmation of that change of character, that trend reversal. Look for the reversal pattern to give you an entry. Take an entry off that candlestick. You're done. Now, if we go back to 30-minute, that previous retest over here, market breaks up, comes back, retests. I can do the same thing again. I can confirm the reversal candle. There's my entry, and the market goes. Now, eventually it does get stopped out here on that move. But look, we do go all the way up here first before that, and you're probably out of the trade with profits. And if we go to a 4-hour time frame as well, show you this is multiple time frame. It works on every single time frame. Now again, we come in, we feel that imbalance. We see the break of this swing high, this move here, break up, pull back. This would be my level to reverse. There's my entry on that bullish candle. And there you go. That's using a weekly with 4-hour entry. I've then gone through and shown you a 4-hour time frame with a 30-minute entry. And I've even shown you a 30-minute time frame with that 5-minute entry. And it works the same on every single time frame. So if somebody says to you, do you scalp the market? Are you a long-term trader? Are you a swing trader? I've just shown you here that you can apply the same concepts over and over again, and they work on every single time frame. Just remember, when you're using 2 time frames, it's going to help with not only finding a better trade setup, it's going to help with your discipline and your motions in trading. But if you want to take your trading even further, then I suggest checking out my free trading strategy class, which you can check out right now.